As of February 2025, Vietnam's economy is showing signs of recovery and resilience, though it faces challenges such as global economic uncertainties and domestic structural issues. Here are some key points about Vietnam's current economic condition. Vietnam's GDP is projected to be around 4.5% to 6%, lower than the government's initial target. This slowdown is attributed to weaker global demand, particularly in key export markets like the U.S. and Europe. The economy is gradually recovering from the impacts of the COVID-19 pandemic, with domestic consumption and investment playing a significant role in driving growth. Exports, a major driver of Vietnam's economy, have faced challenges due to reduced global demand. Key export sectors like electronics, textiles, and footwear have experienced slower growth. However, Vietnam remains an attractive destination for foreign direct investment, FDI, particularly in manufacturing and technology, thanks to its competitive labor costs and strategic location. Inflation has been relatively stable, with the government aiming to keep it below 4.5% in 2023. Rising global energy prices and supply chain disruptions pose risks, but Vietnam has managed to control inflationary pressures so far. Vietnam continues to attract significant FDI, particularly in high-tech industries and manufacturing. Companies are diversifying their supply chains, and Vietnam benefits from being part of key trade agreements like the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, and the Regional Comprehensive Economic Partnership, RCEP. Global economic slowdown. Weaker demand from major trading partners like the U.S., China, and the EU has impacted Vietnam's export-oriented economy. Real estate sector. The domestic real estate market has faced liquidity issues and a credit crunch, affecting construction and related industries. Structural reforms. Vietnam needs to address issues like bureaucratic inefficiencies, infrastructure gaps, and labor skill mismatches to sustain long-term growth. The Vietnamese government has implemented measures to support economic recovery, including monetary policy easing, tax relief, and increased public investment in infrastructure. Efforts are also being made to improve the business environment and attract more foreign investment. Vietnam's economy is expected to rebound more strongly in 2024, with growth potentially reaching 6% or higher, driven by recovery in global trade and continued FDI inflows. The country's young and growing population, along with its integration into global supply chains, positions it well for sustained economic growth in the medium to long term. In summary, while Vietnam's economy faces short-term challenges, its fundamentals remain strong, and it is expected to continue its trajectory as one of Southeast Asia's fastest-growing